we certainly do have a great team behind us. And the one thing that I pride myself on, we actually answer the phone. You won't be able to get us here on the weekend, but, during the day, we try to answer every call that we can. Obviously we have an auto attendant just like every business. So, if we can't answer, then, you can still ring through to who you need to talk to.
Right.
But we strive to warm or, live answer, I guess the word is, answer the telephone.
Yeah, good. All right, let's talk about the Bank of Canada. For the first time in a very, very long time, you and I chatted about this on my radio show on CityNews 95.7 the day that the Bank of Canada, well, we do this every time Bank of Canada
That's right,
makes an announcement. You join me on the show.
Mm-hmm.
But they raised the rate just ever so slightly. And what was your general takeaway on that?
You know what? I think economists have been saying for a while that the Bank of Canada is going to increase this key overnight rate. They were speculating there might have been increases last year, and then in January they were going to increase it. So no one was surprised when there was an increase. And they needed to stay the inflation. As you know, right now, Canada, we're suffering from, high inflation. The inflation is above the target. We're seeing that in gas prices. I mentioned that we're seeing this even when you're buying chicken breasts and things like that. So, part of the reason that we're seeing this high inflation, Todd, is people were home for 2 years. They weren't shopping. They weren't buying things. They were maybe renovating their homes, but they were stockpiling cash, basically.
Yeah.
And now that things are reopening, consumers are out in the market and they're buying things, which is creating some supply chain issues. And inflation is really tied to, that supply and demand. And the demand in the market is higher than the supply is for a lot of things. And that's driving, obviously, up the inflation. And one of the levers that the Bank of Canada and really the federal government has is to increase this key overnight rate. And that will help stay the inflation.
Yeah.
Some economists are projecting that we're going to be at the target inflation by the end of the year, which I think is good news. Obviously, we don't know what's going to happen in the world.
Say that again. They're predicting what?
That the inflation is going to be at target.
Which is what? What's the target?
Well, they set a threshold where they want the inflation to be. So I think, normally inflation somewhere like 3%, let's say.
Yeah.
And that's basically where the government wants to have the inflation. And right now, we're at historic highs in terms of inflation. So they increased the key overnight rate by 25 basis points. So that's 0.25. Yeah. And obviously that directly impacted the prime rate. With most lenders, prime rate is now 2.7%. Okay. When the Bank of Canada increases the key overnight rate, typically what happens, Canadians start saving money. It's just a symptom of a higher borrowing cost. Yeah. And that's really what the government is trying to do. In Halifax, our gas prices are near the $2 a liter
and
mark.
they'll be over that as well soon.
And in some, areas around the world, obviously it's much more than $2 a liter. Our 0.25 increase in the key overnight rate is not insignificant. Obviously, it has an impact. Yeah. If you have a variable rate mortgage, on average, your payment's going to increase about $12.50 or so per 100,000 of mortgage. Right. Now, obviously, things like amortization makes a difference there, Todd. So I'm using just like a very general oversight. And a lot of borrowers are asking, does it make sense to convert into a fixed rate? And the majority of them were saying, no, it doesn't make sense. The fixed rates today for an equivalent product for most borrowers are going to be double what they're paying in the variable. There's a lot of runway between where the variable rates are and where the fixed rates are. So usually what we're telling people is to weather the storm. Our average mortgage here is somewhere around $300,000, in Halifax. Yep. And so that means the average consumer is seeing about a $35 increase in their mortgage payment based on this increase. There's going to be more. The prime rate is going to continue to increase as the Bank of Canada tries to stay this inflation. And the thing is, the prime rate's been lower, and it may go down again. There's a lot of uncertainty of obviously what's going on. What's going on with Ukraine is going to have an impact on global markets. So I think if you're in a variable, you need to stay the course. Yeah,
but locking it. Let's suggest you're in a variable, and somebody says, "Look, Clinton, I want to lock it in." What would the difference probably be at this point between the variable
And the fixed.
And the fixed.
Depends on what your mortgage amount is.
Yeah.
But I would say on average, it's going to be like $200 to $300 a month more to take a fixed rate.
Wow.
And here's the thing.
Yeah.
You are going to pay a higher rate for stability.
Mm-hmm.
Does it make sense to pay that much more just to know what you're paying?
Yeah, exactly.
Historically, borrowers do better in a variable, Todd.
Yeah.
Historically, they do. You need to weather the storm. And, for us, obviously, our clients, we're doing a lot of communication with them. I put out a post on the Tuesday night before the Bank of Canada obviously made the announcement. The writing was on the wall. So I basically told them what to prepare themselves with.
Mm-hmm.
Then, obviously, we did a live stream right after the Bank of Canada met. And we emailed all our clients that were in a variable as well as business partners to let them know what happened. And we were actually able to get the message out even before Apple News got the message out. So we're right all over it.
Yeah.
We send an SMS out to all our clients that are in a variable that obviously have opted in to receive SMS. We can send them a little quick
I received
message,
it.
which is pretty cool.
Yeah.
Right?
Yeah.
And these are next level things that maybe the bank cannot do. Like we're small enough and nimble enough that we can do things like that, which I think is really cool.
But there are some people that are willing to pay that premium, and I'm sure you talk to them. They say, "Look, I want a fixed rate, and that's fine, right?"
Yeah, you know what? It is personal preference. I do not live in your household, and I think if you are losing sleep at night,
Yeah.
maybe having a fixed rate is not a terrible idea. Yeah. You're going to pay for it. It's going to be a costly, stability thing. But if it's impacting you and your sleep, lock it in. It's going to cost you, and it's going to be more expensive.
Yeah.
And there's, obviously some downsides from having a fixed rate, but, there's some upsides too. The one thing that I do want to caution, obviously listeners with, if you were going to convert now, instead of weathering the storm in the variable rate, what happens if these fixed rates go back down?
Exactly.
You could pay a very large penalty if you need to break your mortgage early, and Canadians are notorious at breaking their mortgage before the term is up.
Yeah.
Honestly.
Why do you say that?
Life changes.
Yeah.
Right? The average mortgage in Canada is a 5-year term. So many borrowers break their mortgage before the 5-year term. Maybe they're buying, they're selling, they could be doing a refinance. There's a lot of reasons why people break their mortgages early. One of the big reasons right now existing homeowners are breaking their mortgage early is because values are up and rates are pretty low.
Pretty low, yeah.
Right? So they have the ability to refinance and pull that equity out. And maybe they're going to pay down some debt, or maybe they're going to, do some investments, or maybe they're going to do some renovations on their home. So we can maybe talk a little bit about that too.
Yeah, we can talk about refinance. There's all types of parts, variables concerning our refinance for sure. So let's do that. And what else do you want to talk about in the show today?
We're going to talk, obviously, about what's going on here in the housing market. Obviously, we're coming into spring. It's one of the busiest seasons of the year for, obviously, buying and selling homes. So we'll certainly talk more about that during the show.
Okay. So this is you're having a good time though, aren't you?
Oh yeah, I'm having a great time.
This is one of the highlights of your whole month, isn't it?
It is, really. We get really excited about Mortgage 101. I just want to give a little quick shout out that the show is going to be available on Anchor and anywhere you want to listen to your podcast. So you can listen to all our old shows there. It's also going to be on social media and on our website. So you can certainly check out any of our old content as well.
Okay, Mortgage 101, your guide to homeownership returns.